Well, I felt a bit lonely a couple of weeks ago, and I feel less so now. What I would say on the stock is that we've had like a fairly steady flow of news coming from the value chain of Apple, from supplier of fashion. So we've had Foxconn, we've had Lumentum, we've had Corvo, we've had many others, and all these data points indicate that it looks like Apple is cutting orders by 25 to 30% on its new phones. And so my perspective on 2019 is the following. It's two things. The first one is that we are in a situation where Apple's first-hand buyers, that group of people is not growing anymore, and they still like their iPhone, but they keep their iPhone longer, so iPhone refresh cycles are extending, and that means shipments are coming down. And the second thing that we didn't really see that happening last year, because the iPhone 10 was extremely successful and brought forward some demand. So 15 million buyers who would have normally bought their iPhone in 19 did it in 18, and they are not in the market this year, this time round, and that's the reason why demand is very disappointing.
Timothy, what's your view in response to that, that the iPhone sales cycle has perhaps peaked in terms of growth terms?
Well, certainly we've heard that same story for every S cycle of the iPhone, whether it was the 4 to the 4S, the 5 to the 5S, or the 6 to the 6S. The second year of a new design typically has perhaps a slower uptake rate. But I think Pierre certainly was early on the story and had it right at the time. But if you look forward through that, you have pretty high demand coming from 5G cellular phones looking out the end of 2019 into 2020. So for long-term investors, it seems like a short-term problem with a long-term solution.
Yeah, Pierre, I guess one of the things that seemed to be inflating Apple stock on the way up was this sense of certainty out there that essentially companies buying back so many shares, Warren Buffett owns 5% plus and he's never going to sell, and this idea out there that there was almost a scarcity of the stock. And that being the case, we could just sort of wait for the thing to be revalued as a services company. With the discount that's now in there from the highs, are we any closer to that bull case being correct at a lower stock price?
Yeah, I like to call that the Warren Buffett case, and I actually fully agree with it.
Yeah.
I think Apple does become a service company. Apple does have a fantastic consumer franchise, and is a very highly valuable business. Now, there is a big difference between a company buying back its stock and growing into new sources of revenues like services and new devices with a stable base, and the same company doing the same thing with a declining base. And history shows that the market doesn't like the declining base. So we need the iPhone business to find stability before really buying that Warren Buffett case. And that's what I recommend investors, to wait for signs of stabilization of iPhone shipments. And then I love to compare that to what happened in the PC market between 2012 and 2017, when PCs actually shipments declined for 5 years. We are like in the third year of decline of shipments for the iPhone, so maybe a couple more years and we'll be there.